I'm over 70 years old, so in about a year and a half, 2 years, I'm going to have to start taking cuts from my 401k, automatic payouts. The government makes you do that.
Your required minimum distribution. Yeah.
Right. I don't use that money. It just sits there. It was making money under the Trump administration. It's kind of losing money right now.
Yeah, notice that.
Anyway, I don't really know what to do with that money because I don't need it, but my gut feeling is to invest it in gold.
No.
No?
We don't put anything in gold. No. If you don't need it and you want to let it sit somewhere, let it sit in a good mutual fund. That's fine.
That would do better than gold?
Oh, absolutely. I own some gold cufflinks, and that's the only gold I've got.
Okay. Yeah. I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down, much more than the stock market is. A lot riskier. And it does not yield the net return. The average annual rate of return on gold sucks.
Really?
Yeah, It's awful. Yeah,
I don't know that much about it. I've just heard that gold was a good investment. So
usually from people that don't have any money.
That 401k will just be part of my daughter's inheritance.
That's cool. That's cool. You're going to pull that money out of the 401k that we're talking about because you're required to, and I would just be moving it into good mutual funds in the process.
I think I'm going to ask a question on behalf of maybe new listeners. Maybe somebody's never heard you talk about this. Why are you so emphatic about gold? And, well, we know why. It's up and down. Why is it so up and down? Because the way it's sold is, well, if the dollar gets hurt, you need gold. I mean, that's the fear message that's behind this. Why is gold so volatile?
Gold is a commodity, okay? It's a rock that is yellow, okay? You have barrels of oil. You have precious metals, diamonds, commodities, corn, commodity. And commodities are all traded 100% based on people's perception of shortage. If the perception is that there's no shortage, that there's too much of it, the price goes down. So, like the old movie Orange Juice Futures with Trading Places with Eddie Murphy, which was a mythological future. Okay, there weren't orange juice futures, but it was fun for the movie's sake. But all that is you're betting on, and commodities are all more volatile than investments that actually create revenue. So, investment that creates revenue is a company that's running that makes a profit. Home Depot makes a profit. Microsoft makes a profit, and it's either a lot of profit or not much profit. Apple makes a profit, a lot of profit, and so their stock goes up based on the fact that they are creating revenue. Gold and corn and oil does not create revenue. It only trades based on scarcity, and people's perception of that scarcity is greed and fear. Yeah, and it's like, I'm afraid, so I'm going to rush towards it, and if a whole bunch of people rush towards it, it creates a shortage and the price goes up. But that's the only thing that causes the price to go up. The gold did not become more valuable, just more people were chasing fewer bars. That's all it is. Supply demand drives it up. And so anytime you're investing in a commodity, you are at the mercy of the psychology of the marketplace. Everybody's scared or everybody's greedy. And they're chasing two things. So that's the only way price is established. Where if you buy a piece of income-producing real estate, price is established based on the income it creates, not based on, oh, it's real estate, woo! It's not, oh, it's a golden rock, woo! Okay, so the golden rock has no magical qualities. It's a rock. It's a golden rock. Diamonds don't have magical qualities. They're a little clear thing, and they're not necessarily a girl's best friend. That is a marketing slogan by people who sell diamonds.
Yes. Because
diamonds do not go up in value. I've got quite a lot of them hanging around my wife.
Yes,
and
you did
so,
well.
And let me tell you how much they've gone up while I've owned them. Not
right
at all.
Right. So for people that are seeing
the rate
these
of return is called marriage.
Yes.
But there is no actual investment return on the stupid things. They're a complete waste of freaking money otherwise.
So give us 30, 40 seconds on these headlines that people are seeing, and that's why we get this call in gold. They're saying, the dollar's in danger. China's making moves. Russia, it's in the headlines all the time. What should they do when they hear these headlines about the dollar and it's the danger in the dollar?
Well, the number one, you can't run to gold. There's nothing magical about it, okay? Number two, Brazil and China and Russia are large land masses, but Russia and Brazil are not large economies. Their gross domestic output is very low. Texas has a larger gross domestic production than Brazil. Texas is a bigger economy than Brazil. So do you think that Brazil and any of their little friends are going to snipe the dollar? Not a chance. They're going to have to do business with the 800-pound gorilla, and we do business in dollars. So they're going to be at our mercy still.